Hello everyone, and this is my market update video for January 16th, 2025. And I am looking at the QQQs. So, like I said yesterday, I was still not convinced that this is a real breakout. However, I kind of agree that I should have taken profit and then went short again. Um but that's okay. Hindsight is always 2020. But it's back into this areas. This area not easy to break. If this area had to be broken, it should have been broken today because it uh, opened above that, and then if it was bullish, the market was that bullish, should have just trended up, but it fell back into this area. So this kind of gives me a hope that I am right. And let's go into like hourly to see how it ended. It ended right close to this trend line. So it hit it. This there is this channel that I drew. It's above that. So after hours also, it's just hanging above it, but it's still in that um, uh, resistance area. So let's see. Tomorrow will be decisive if it falls below that. If it opens below that, I'm thinking will have it'll fall back into this channel and then go all the way here. So that is QQQ. Also QQQ, I just wanted to update on the trend indicator from my algo. So weekly for QQQ, it's barely positive. And daily also it turned today, but it did not cross into negative territory, but it's just barely hanging even. I would say it's neutral. 4 hour it crossed above, but hourly it's down, and monthly of course it's up. So looks like it's up. If there is a push up, it should um, basically it should be easier for market to go up from here, but doesn't look like um, there is enough gas in the tank. Same thing, SPY. Let's look at the daily time frame. So SPY was interesting today. It actually broke out and then it hit this resistance. It kind of looked like as if it wanted to uh, break out and then break out of this trend line, break into this above that this trend line. But by the end of the day, it actually fell into this channel. So looks like it might end up being just fake out. So if we go into hourly, it's a little bit more clearer here. So see how it just barely ended here and then it's just hanging in there. So like I said, S&P definitely sounds weaker than QQQ. QQQ is eager to break out again, but S&P is pulling it back. Also guys, this I see volatility is definitely oversold on a monthly basis. And when I looked at VIX yesterday for on a daily basis, it began the month somewhere around this area, which is higher here, and then yesterday it kind of um, fell below this open monthly open. So this is where it opened yesterday. It ended here, and today also it's hanging in there. So if monthly is oversold, I see more momentum coming in to this market, more volatility coming into this market, because I mean, if on an oversold monthly indicator, it's very rare that it actually ends below this open. So um, it's still hanging in there. It's trying to go up there, but for that to happen, market needs to go down. So that is one of the reasons why I'm bearish also. So let's look at Tesla, guys. That is one of the trade that I took yesterday. I got an indication that there was a there was a negative uh, alert from my algo. So looks like it tried to break out. This looks like a pretty bearish candlestick pattern to me. Um, it was completely an inside day, um, but it's kind of hanging in there. So I'll look at it tomorrow. I'm barely in positive, or I would say break even. I'm just at the zero line on this trade. But if it goes and breaks this line, tomorrow or Tuesday, I'll still stick around. Otherwise, I'll just get out, cut my losses short. Um, so that is my strategy on Tesla. But this looks bearish to me on a daily basis. Also, another trade that I took today was Carvana. So Carvana, I had an eye on this stock for a while. I don't think it deserves this kind of evaluation. Hindenburg came out with a report. It fell on that report. Today, Hindenburg said they are closing down the shop. It's, I feel it's really unfortunate what happened, because I think the way, I don't know, I mean, Fed or government, they have, or the market itself is has gone into this mode where basically price always goes up, so there is no price discovery. So every time there is a correction, or there is even a sign of correction, these huge buyers with unlimited money come in and say we'll support the market, and that might last for a while, but it won't last forever. And I think, I think we are on the verge of that breaking point. So I took a shot on this Carvana. I bought puts. So I'm not saying I'm right, or I'm not claiming that it's a. But here is my idea behind that. So if you look here, so today it bounced. I don't know why it's so positive that Hindenburg closed shop, and how does it correlate to this particular company stock going up. I don't understand that, but it did jump up, and I kind of bought puts. I bought leaps. So I'm thinking this is pretty good resistance area. If it ends below, if it breaks up, I'm out of the trade. And I'm out of the trade also if it doesn't break down until July. So I'll still have some value in those puts, and I will get out. But the reason why I took these shots is, first of all, I have an early indicator that unemployment claims should go higher. So today the unemployment claims came higher, but I don't think this is like, looks like this is like stale data. Looks like they are probably this is mostly December data. I don't think there is a lot of January data here. I think in February and March you'll see this going much higher. And once there are U.S. consumer is already teetering on the brink of financial he is financially stretched, I think, he or she, and on top of it losing a job definitely will impact. And first thing that goes out is are two major expenses. The one is the rent, and the other one is the car payment. So I think this unemployment number going forward will impact car market pretty bad. So that is also the reason why I'm getting a lot of alerts on the regional banks. So a lot of these banks probably hold these car loans, and it doesn't look good for them. Another reason why is when I look at one of the economic indicators. So this is Fed's balance sheet, guys. So they have been shrinking the balance sheet, and right now it actually is in the long-term channel, and this is the trend line. So if you drew the trend line, It kind of crosses this long-term trend line around April 2025, and it crosses this end of this channel uh, by January 20 or December 2025, January 2026. But this crossing this long-term trend line, this shows pretty. This shows that money will tighten a lot. So, um, Fed has been basically buying mortgages, and they basically um, are not buying mortgages anymore. So that's why their balance sheet is shrinking. So once this it crosses this long-term trend line below, I believe financial conditions will tighten a lot. This is the reason why I kind of wrote an article on my blog saying that you should probably raise cash here on January 4th. I'm getting a lot of indication, and this is my long-term reason why, because after April, May, June, um, you won't see the credit card offers like we are used to in the mail and all that. So remember, guys, also during past years, I was constantly getting this offers from iBuyers to buy my home, and they would offer they would send offers in the mail. Now those have dried up, and I think after like May or June, sometime after May, I think you'll start seeing those offers of loans and personal loans. All those offers dry up because financial conditions will tighten. Um, U.S. money supply is still it's still growing, but with the change of administration, you never know what's going to happen. The administration is going to change. They might not, be doling out money like the current administration. So all these things, I think, will have impact on car market, and I think Carvana is definitely overvalued. I don't think that stock deserves. It's not doing anything unique. It doesn't deserve this rich valuation. Hence my short. So that is my update for today, guys. And I'll see you in tomorrow's video. Thank you. Bye.